what's happening right now, we can put a box round. Essentially, we are stuck in this little range. So that's the kind of the first thing that we need to say. So it's almost like we've had this big drop, and I feel like right now the market's a bit uncertain. Are we going down to these levels? Are we going up? So I think the market doesn't know at this stage. There's kind of it's almost like let's take a breather and let's figure this out. That's kind of what it feels like. So I think short term, I think it's an idea to just focus on the current opportunities without having to necessarily guess where it's going to go. But I will give you the scenario that is optimal for us for a swing trade. So firstly, let's just expand this out. So we've got this channel line, which is basically a parallel of here. Okay. And if I just kind of show you, you can see that it's quite a nice reactive line. And off the back of this drop, one of the things that I always like to measure off, especially off a drop like that, is if there's no momentum. So this is going to be a little bit of gold for you if you understand it. So if the market is in a downtrend, right, especially with something like Bitcoin like that, and the market goes and pushes down, the pullback could be what we call a shallow pullback. Because there's a lot of selling pressure. Everybody understands we're in a downtrend, right? So therefore, you don't tend to get big pullbacks. So if you take this as an example, look at the small pullbacks here, right? So you tend to see more like that, small pullbacks. And if you go to a lower time frame, you'll see that even more. This, however, is not a downtrend. This has actually been channeling up. And then we've had this big drop. So because it's not a downtrend, you could reasonably assume that the buyers will fight back because we are in an up channel. And if the buyers are going to fight back, there's a chance that they might take it up more than the sort of shallow pullback towards the most common ratio, which is the 618. So I always, in this scenario, want to know where is the 618. So I'll take a kind of high to low, and the 618 is where my green line is, right there. So it's just shy of 49,000. I think as an upside target right now, that's a really nice area. So if you're long, that's a nice area to look out for some potential resistance and a good profit-taking area, even if you want to cut some of your trade or investment. So if you're not long, I would certainly be looking at that as an area of resistance where the market might pull back. Now, the optimal part now. So now I'm talking about short term. I think that if you find a good entry, as I have this morning at the bottom of this range, it's definitely worthwhile. I could potentially cut some of it at the top of this range and then leave the rest to see if we can just push up a little bit higher, find this old support, and that's 618. Okay, so that's the short-term plan. Now, if this market was to go down, I would love this area here to be our buy zone, right there. Because what do we have here? We have the 200 EMA acting as dynamic support. We have the potential of this this channel line, this really, really great old resistance, double purple line there becoming support. So it's possible that we could go up and still do that, by the way. That's not impossible, but I would say that it's more a case of like it'd have to happen quite quickly. So we spike up and then something else happens and then it does that and then it does that. I think if this spikes down now, this could be a really nice area to be looking. Now, I want to give you a different scenario of where the market could go. Because if you're going to be accumulating and you want to buy value, this would be one of my zones. But I want to give you a second zone because I think this is a possibility as well. The 1618 and even the 200 down here. If you want to accumulate Bitcoin right now, again, this is not investment advice, and you are not long right now, and you want to buy this for the long term, short term, trade it. Try and buy it up to here or buy the bottom of the range. Do what I'm doing now. Long term, this would be buy zone number 1. And if for some crazy reason we got down here, that would be buy zone number 2. And then a third crazy reason, then that would be buy zone number 3. Now, I don't know if we're going to have such a drop. I don't know that. If we don't have any sort of drop at all, and this just goes up, then you're going to be looking for pullbacks at that point. So, for example, let's say this market didn't stop here and it just kind of started to really start to go higher. In that case, we'll be talking about, okay, old resistance, let's buy it. It becomes support. And we'll be looking at these levels to be buying it, right? So you've just got to plan. And if it doesn't work out, then you wait for the market to kind of give you the pullback that you need to get involved. But in the short term, you should always be trading these opportunities because there's so many opportunities to grow your account. And eventually, when you do invest, even if the price is a little bit higher, you should hopefully have been growing your trading accounts so you've got more money anyway. So in relative terms, it's the same thing. And any questions there on that? Gavin, does that make sense? What do you think?
It's very, very interesting. I mean, if we got back down to the 200, I mean, we've just seen it's not out of the realms of possibility. That's for sure.
No. So in terms of value, that's around that sort of 41-ish thousand. Yeah. It's about 41, 42,000, something like that.
And the interesting thing that you've given us choices where there weren't any previously. So you've got the 200 EMA, which is option 1, and then you've got the 200 of the fib, which is option 3, right? And that is quite low down, but it makes sense.
It makes sense. Yeah, because I mean, look at this channel here. If putting our emotions aside of what we want to happen, right?
Yeah.
I mean, if that happened, for example, would anybody here be shocked? Because that's pretty normal in Bitcoin. That can easily happen. And as I've been saying, this is not to scare people, by the way, because I'm still buying Bitcoin. I'm still long cryptos, but I am prepared. Like my mind is open, and that's how you have to be. It's not like, oh my word, okay, I've got my portfolio. It's going to be 10 million by the end of this year. Like, and all you're thinking about, okay, yeah, this one's going to triple. This is going to do a 10x, 100x. And you're just thinking about all the money you're going to make. But actually, good traders, good investors think about everything else. That's taken care of. The market's going to do its thing. It's great. If you're in it, great. But actually, what about if it does the other thing that we don't want to think about? What if it crashes? Then are you prepared? Have you got some cash available in case it does do something crazy? Like, it's possible, right? I mean, this is absolutely possible. So we have, and especially with like the news events coming out, the bill could kind of spiral something. And actually what's going on in general, in risky assets, the stock market's overinflated, and there could be a play where people move into safer assets. And, what I was kind of saying, we've got a very important statement from the FOMC coming out this month, next week, I believe. We'll check the calendar, but I think next week. And, again, that's going to, if there's a hike in the interest rate, that normally leads to, people moving their money from risky assets and putting it into safer assets, because you're getting more interest now by holding dollars. So all of that can play a part in this very uncertain market. And if lots of things go wrong for cryptos in the short term, you could see why they might use that as an excuse to flush out the weak hands, the greedy hands, the over leveraged hands, and then reverse the market. And then, everybody's out and the big boys are making money again. And the little guy is just distraught and wrecked. Obviously, we want to stop that from happening, so that's why we do these shows, and I give you this advice because I want you to be prepared for everything. So that means actively prepared. Like, look at your portfolio. Am I over leveraged? Am I in position? Can I handle a setback like that? All of those things you should be thinking about right now, not when they happen. Yesterday I spoke about tax. Don't think about tax when you've made £1 million. Think about tax now, because when you've made the money, at that point, it's you've got to pay the tax. And if you haven't done the proper tax structure, you should have been thinking about it before. And it's the same with this. Don't wait for the market to crash and then think, oh my God, my portfolio. Think about your portfolio now where everything's nice and calm.
Well, and that is great advice, mate. And you're really going the extra mile just to open up the blinkers for everyone, just from different angles. And like I said, we know it. How many people in the world are actually doing this level of Bitcoin analysis and giving it away for free, which is a totally another thing. But one of the things that I want to comment on here is it's like nature's cycle, right? So the farmer knows that he's gonna plant his crop over the winter and grow it for the summer, and it goes in cycles. And the stock market, or the stock market, the crypto market, trading, whatever it is, when I first got into it, one of the things you helped me with is just because it's going up, it's not always going to keep going up, and don't get affected by it coming down. It's part of the natural cycle. So if it does come down, looking at that price, right? 42 down to what, 34? That's 20%.
Yeah, 42, 36 and a half.
Where's option 3 though? Where's option 3 if it goes down off that yellow
option
market?
3 is about 32, yeah.
That's 20. That's 20% dip on Bitcoin. Now, what have you said time and time again on this show? Bitcoin's daily trading range can be up to 25%, right? And that's still not classed as a crash.
So from where we are, about 26% from there.
So that is definitely a higher probability play now.
And back to these lows would be 36%. Yeah, I mean we've seen a lot more than that in the past. Let me just can I just check one more thing actually that I didn't do?
Do you have to? Do you have to drop more bombs, mate?
Right, let me just see something. I just want to see where the ABCD is. Yeah, that completed the D there. That didn't quite. So I just want to see. Hold on, let's zoom in.
So just while Andy's doing that and he's saying, hold on, I'm going to take this opportunity. I haven't spoken about it with Andy yet, but I'm sure you won't mind if I drop a little exclusive on what we've been talking about the past few days. Trading isn't for everyone. We know it's definitely an acquired taste, but this is a time when you can be making a lot of money over the next few months, few years, for your early retirement, for your future. So we are working on a product where Andy's going to help you invest in spot. So you don't have to be an aficionado about trading. You don't have to be in front of the screens, which Andy shows you not how to have to do that in trading anyway. But we're working on another product for the total layman that's not interested in trading whatsoever, doesn't want to kind of be interested, throw themselves into that, but you want to invest in something. Your friend, your sister's been talking about it and you feel like you're missing out. We're going to create a product for you where you can still make a lot of money just by hodling and spot investing. So keep your eyes out over the next few weeks. We'll let you know when we're ready with that. And we're really, really excited to help even more people here at the Crypto and FX Traders Club, sponsored by the London Trading Institute, just in case you didn't know that, which Andy's the CEO of and gives up a lot of his time to do shows like this. So hopefully that's given you enough time to work out what you're going to work out. And I just dropped that little exclusive bomb in there as well. So keep your eyes peeled, guys.
Yeah, no worries, man. Yeah, so the idea here, I wanted to see where we are on the current fib cycle. So we've done an AB, shallow pullback. We've come back to the nearly the pretty much the 618 there, which is a good pullback. But the official 618 is around 42,442. That's very interesting. So that's interesting. And then you've got this orange line here, which is 41,486. I really, really like that zone a lot. I would love it if it could drop down there so we could, because it kind of all pieces together if you understand how the fibs work. So we've got this confluence here, this purple line matching this orange line. So a pullback here into this little zone and then a rally to there. I think that looks like a really nice setup. If you want a swing trade, that's it. Buy. You could put your stop. If you want to be conservative, you could put your stop behind the A, which is this low down here. So the stop would be somewhere there. You'd risk that much and you'd be looking to make that much. So if you're going to do a swing trade, you'd probably want to definitely want to put more than 1% on, because that's not something, that's a significant move and you're probably making 2 to 1 on that. So I would be looking to do something like 2 to 3% or something like that to make, maybe 5 to 6%. I think that's a good little longer term for people that work. You could stick your order in, your stop, your target, leave it alone.
Very good, sir. Very good. So we've had a couple of comments. Connor's saying, is it going to be a stacking pool? And Nick saying, Mr. Demi's ethical crypto hedge fund. We're going to keep you waiting a bit longer, guys. But yeah, so it's going to be something that you take control of, and Andy's just going to show you how to invest like a pro rather than the trading element. But obviously, if you can invest and buy at spot and trade, then that's the double whammy, and get involved in both of these sides of moves. Then obviously that means that you're just going to expedite your gains even quicker, which is almost not fair, but that's the way it is. Zach saying, sounds like a plan.